If we see a recession, we could see a decline in oil demand and prices could come down from the current levels. But I think there are certain structural supply side factors which will provide a price support. We believe that prices will average between $50 WTI and $70 WTI, which we call our mid-cycle pricing band. And this is based on a few factors. One, global crude oil inventories are currently running at their 5-year average lows. There is no new production that's a large swath of production coming online over the next 2 to 3 years. International oil companies are also cutting down on capital investment and focusing on developing their fledgling low-carbon businesses. U.S. shale producers are also unlikely to ramp up production materially as they're focused on operating within their cash flow and returning capital to shareholders. And finally, OPEC Plus, which is probably the most important part of the equation, has clearly shown that they're willing to cut production to support prices if required, even if that means it antagonizing North America or Europe. And finally, the conflict between Russia and Ukraine, I think, will act as an overhang on prices or supply rather over the next 2 to 3 years here. Russia has been sanctioned since invasion, but they've still been able to get their product into the market by selling to India or China. But I think there is only a limited amount that they can continue to sell to those countries. And additionally, the embargo that's expected to come in place on Russian oil in December will, I think, have an impact on supply going forward.